Hey guys, this is Robert with Malai Law. We help entrepreneurs just like you start their businesses without dealing with complicated legal forms. We are also the #1 highest rated business law firm for entrepreneurs with more than 1,500 5-star Google reviews. Today I am going to provide you with some information to help you decide which business entity is best for you. Many new entrepreneurs have a hard time deciding which business entity to choose from, and choosing the wrong business entity can result in you being exposed to more legal risk, higher taxes, and more complicated yearly maintenance. Please keep in mind that the content in this video is for educational purposes only and is not legal advice. I do recommend that you reach out to a lawyer and an accountant to determine what is best for your particular situation. But in this video, I will provide a little bit of information about the different business entities. The first most common business entity is a limited liability company. LLCs have become very popular, and they are sort of a hybrid type of business organization, which combines the liability protection of a corporation with the tax treatment and ease of a partnership. Unlike shareholders in a corporation, LLCs are not taxed as separate business entities. Instead, all profits and losses are passed through the business to each member of the LLC. LLC members report profits and losses on their federal tax returns just like the owners of a partnership would. In other words, in the eyes of the government, an LLC is not a separate tax entity, so the business itself is not taxed. Instead, all federal income taxes are passed on to the LLC's members and are paid through regular income tax returns. Since the federal government does not recognize LLC as a business entity for taxation purposes, all LLCs must file as a corporation, partnership, or sole proprietorship on their tax return and must designate their preference when obtaining the EIN number. This is an important topic that will be discussed in another video. But overall, LLCs can choose how they are to be taxed by filing Form 8832, and on this form is how you can choose to be taxed as a corporation or S corporation or sole proprietorship. So now let's move on to the second most common business entity called a C corporation. A corporation is an independent legal entity owned by its shareholders. This means that the corporation itself, not the shareholders that own it, is held legally liable for the actions and debts the business incurs. Corporations are more complex than other forms of business organizations because they tend to have a costly administrative fee and complex tax and legal requirements. Because of these issues, corporations are generally suggested for established, larger companies with multiple employees. For businesses in that position, corporations offer the ability to sell ownership shares in the business through stock offerings or going public, called an initial public offering. This is a major selling point in attracting investment, capital, and high-quality employees. A corporation's shareholders, directors, and officers must also observe particular formalities in a corporation's operation and administration. For example, management decisions must oftentimes be made by a formal vote and recorded in the corporate minutes. Also, director and shareholder meetings must be properly noticed and documented. Finally, a corporation must meet annual reporting requirements and pay ongoing fees in its state of incorporation and in states where it is registered to transact business. Ultimately, taxation is a significant consideration when choosing a type of business organization, and a C corporation is taxed as a separate legal entity, which means there is no pass-through taxation like a partnership or LLC. A business tax return is filed and taxed as the money is made, and there is a tax on the corporation's profits. If the corporation distributes profits to the shareholders in the form of dividends, shareholders pay income tax on those distributions as well. This creates double taxation of corporate profits. So overall, a C corporation is a great entity for large companies that plan to raise money from outside investors or go public, but it does put you at risk of being double taxed. The third most common entity is an S corporation. Keep in mind that an LLC can be taxed as an S corporation, but right now I am going to be talking about a corporation that elects S tax status. An S corporation is a corporation that is elected S tax status by filing a document with the IRS. a corporation can avoid double taxation by electing to be treated as an S corporation. To be considered an S corporation, you must first form a business as a C corporation or domestic corporation in the state where it is headquartered. S corporations are considered by law to be a unique entity separate and apart from those who own it. This limits the financial liability for which you, the owner or shareholder, are responsible. Nevertheless, liability protection is limited, which means that S corporations do not necessarily shield you from all litigation, such as an employee's tort action as a result of a workplace incident. So the main difference between S corporation and C corporations is that with an S corporation, the profits and losses can pass through to your tax return. Consequently, the business is not taxed itself, and this income goes directly to the shareholder and is then taxed at that time. So overall, S corporations are great for individuals that live in the US that want to avoid double taxation and save money on self-employment taxes. But keep in mind, S corporations have limits on the number of owners you can have, so you can only raise money from a certain amount of investors, and also they are often only provided to US residents. So in summary, there are three main business entities: LLCs, corporations, and S corporations. However, keep in mind that there are also LLCs that can elect S or C tax statuses. Be sure to call us to help you determine which is best for your particular situation. Oftentimes, choosing the wrong entity can result in higher taxes and expensive fees. It may also cost you more money in legal fees down the road to fix the mistakes or the high tax burdens that you paid as a result of the wrong tax selection. So if you're starting a business and you need help deciding which business entity is best for you, then go ahead and click the link below. Also, if you have any questions, just post them below and my team and I will try to get to them as soon as possible. I'll see you guys in the next video.